Question 1. Which of the following situations best illustrates the concept of moral hazard in insurance? A. An individual purchasing life insurance to provide financial security for their family. B. A business owner neglecting to install a fire alarm after acquiring property insurance for potential fire damage. C. A homeowner adding additional coverage to protect against unexpected natural disasters. D. A driver purchasing higher liability limits after a recent increase in traffic accidents in their area. Answer B. Explanation. Moral hazard occurs when an insured party has a reduced incentive to take precautions because they are protected by insurance, potentially increasing the likelihood or severity of a loss. Option B represents moral hazard because the business owner becomes less motivated to reduce risk installing a fire alarm due to having property insurance coverage. In contrast, Option A reflects prudent planning for dependents rather than a moral hazard. Option C involves adjusting for unexpected events, not behavior influenced by having coverage. Option D describes a proactive increase in coverage but does not reduce the insured's precautions, so it is not an example of moral hazard. Question 2, scenario-based. Jennifer owns a small boutique that sustained damage after a storm. She reported the claim immediately and an adjuster was assigned to assess the situation. However, during the investigation, Jennifer finds the adjuster's valuation of her damage is significantly lower than her estimate. Jennifer has kept all her receipts and photographs documenting the boutique's original state. What is the best course of action for Jennifer under Oregon insurance law to seek? A fair settlement. A. Accept the adjuster's settlement offer to avoid any dispute or delay. B. Submit her documentation, including receipts and photographs, and request a reevaluation of the damage. C. File a lawsuit against the adjuster immediately for unfair claims practices. D. Refuse to communicate with the adjuster and attempt to negotiate directly with the insurance company's management. Answer B. Explanation. Under Oregon's insurance regulations, policyholders have the right to provide additional documentation if they believe an adjuster's assessment does not fully account for their losses. By submitting her receipts and photographs, Jennifer is exercising her right to a fair and transparent claims process. This approach may lead to a revaluation of her claim without escalating the dispute. Oregon law emphasizes fair dealing and clear communication in claims handling. Option A would result in a potential undervaluation of Jennifer's loss. Option C is premature, as Jennifer should first attempt to resolve the matter through available documentation and communication. Option D would likely delay the process, as direct negotiations with management might not be allowed without following claims protocol. Question 3. In the context of Oregon auto insurance regulations, which of the following coverages is not mandatory but provides additional financial protection if the policyholder's damages exceed the liability limits of another at-fault driver? A. Collision coverage. B. Comprehensive coverage. C. Uninsured underinsured motorist, UMUM coverage. D. Medical payments coverage. Answer C. Explanation. Uninsured underinsured motorist UMUM coverage provides financial protection for the policyholder if they are involved in an accident with a driver who has insufficient or no insurance. Although UMUM coverage is not mandatory in all states, it is a required coverage in Oregon, providing essential financial security. Option A and B refer to collision and comprehensive coverages, which are not mandatory but cover the policyholder's vehicle for various types of damage, accidents, theft, etc. Option D, medical payments coverage, is an optional coverage that helps pay for medical expenses but does not protect against an at-fault driver with insufficient coverage. Question 4. In Oregon, if an insured has property damage from a fire and chooses to replace damaged property with higher quality materials than were originally present, how does the principle of indemnity apply to the insurance claim? A. The insurer will cover the full cost of replacement regardless of upgrades. B. The insurer will cover the cost up to the value of the original materials, with the insured covering the difference for upgrades. C. The insurer is required to cover the cost of upgrades to ensure customer satisfaction. D. The insurer will deny the claim if the replacement is of a higher quality than the original. Answer B. Explanation. The principle of indemnity ensures that the insured is restored to their pre-loss financial position but prevents them from profiting from a claim. In Oregon, insurers will cover only the cost equivalent to the original materials, not for upgraded replacements. Option A contradicts the principle of indemnity by implying unlimited insurer liability for upgrades. Option C misunderstands the insurer's obligations, which are based on actual losses, not upgrades. Option D is incorrect, as the insurer will cover the claim up to the cost of the original materials. Question 5. In Oregon, which of the following describes a fundamental duty of an independent adjuster in handling claims for insurance companies? A. To represent the policyholder's best interest. B. To act as a mediator between the insurer and policyholder without reporting findings. C. To impartially assess damage and report findings to the insurer. D. To provide legal advice regarding coverage to both parties involved. Answer C. Explanation. Independent adjusters are responsible for assessing damage and documenting findings for the insurer. They must perform their duties impartially without favoring the policyholder or the insurer and cannot provide legal advice. Option A is incorrect because adjusters are contracted by the insurer and do not represent policyholders. Option B is incorrect, as adjusters must report their findings to the insurer. Option D is incorrect because adjusters are not authorized to give legal advice. Question 6. A policyholder in Oregon has both a homeowner's and an auto policy. If the policyholder suffers an injury while on vacation, which of the following coverages is most likely to apply? A. Homeowner's medical payments coverage. B. Uninsured underinsured motorist (UMUM) coverage. C. Personal auto liability coverage. D. Health insurance. Answer D. Explanation. Injury coverage while on vacation would fall under health insurance, as homeowners and auto policies are not designed to cover personal injuries unrelated to specific incidents involving home or auto. Option A is incorrect because homeowners' medical payments coverages typically apply to guests injured on the policyholder's property. Option B applies only in cases involving an auto accident with an underinsured or uninsured driver. Option C applies when the policyholder is responsible for damages caused in an auto accident. Question 7. Scenario-based. Michael is an adjuster working on a claim for a flooded property in Oregon. During his investigation, he discovers that the policyholder did not disclose an additional basement kitchen that was heavily damaged by the flood. What should Michael do under Oregon insurance regulations? A. Exclude the basement damages entirely, as it was not disclosed by the policyholder. B. Proceed with the claim and include the basement, as it should not affect coverage. C. Document the undisclosed kitchen and notify the insurer, as it may affect coverage. D. Inform the policyholder that he must deny the entire claim due to non-disclosure. Answer C. Explanation. Under Oregon regulations, adjusters must document all findings and provide an accurate report to the insurer. Since the basement kitchen was not disclosed, it may impact coverage or the claim amount. Michael's responsibility is to report this information, allowing the insurer to determine how it affects the claim. Option A is incorrect, as adjusters cannot unilaterally decide to exclude damages. Option B does not account for the potential impact of non-disclosure on coverage. Option D is incorrect because non-disclosure does not necessarily result in full denial of the claim. Question 8. Which of the following is an essential element of a legally binding insurance contract under Oregon law? A. Negotiation. B. Consideration. C. Settlement. D. Warranty. Answer B. Explanation. Consideration is a key element in a legally binding contract involving the premium paid by the insured in exchange for the promise of coverage by the insurer. Option A is incorrect, as negotiation is not a required contract element. Option C relates to the claims process but is not required to form a contract. Option D is a specific type of guarantee and not essential for contract formation. Question 9. An Oregon policyholder files a claim for a fire-damaged property but has a coinsurance clause requiring 80% coverage. If the policyholder insured the property for $200,000 but the property's actual value is $300,000, how will the insurer handle the claim if the damage is valued at $60,000? A. The insurer will pay $60,000 as the full claim amount. B. The insurer will pay $48,000 based on the coinsurance penalty. C. The insurer will deny the claim due to underinsurance. D. The insurer will pay $24,000 as the policyholder only insured the property partially. Answer B. Explanation. The coinsurance clause requires the property to be insured for at least 80% of its value. Here, 80% of $300,000 is $240,000, but the policyholder only insured it for $200,000. The insurer will calculate the claim payout as follows. Pay equals the amount insured required insurance x claim amount. Thus, pay equals $200,000 for $140,000 x $60,000 equals $48,000. Question 10. Under Oregon law, if an insurer is investigating a claim and needs additional time beyond the initial investigation period, what must the insurer do to comply with fair claims practices? A. Deny the claim if the investigation cannot be completed on time. B. Provide a written explanation to the claimant detailing the reason for the delay and expected completion date. C. Offer a settlement to the claimant immediately to avoid delays. D. Notify the claimant verbally of the delay and request more information. Answer B. Explanation. Oregon's unfair claims practices regulations require insurers to notify claimants in writing if additional time is needed to complete a claim investigation. This notification must explain the reason for the delay and provide an anticipated completion date. Option A is incorrect, as denial due to time constraints is not allowed. Option C could lead to an unfair settlement and violate regulations. Option D is incorrect, as verbal notifications do not meet Oregon's requirement for written communication. Question 11. A property insurance policyholder in Oregon has chosen to add an inflation guard endorsement to their policy. What is the primary purpose of this endorsement? A. To adjust the deductible amount annually based on inflation rates. B. To increase the policy premium each year to keep up with inflation. C. To automatically adjust coverage limits in line with the inflation rate. D. To cover inflation-related increases in both premiums and deductibles. Answer C. Explanation. An inflation guard endorsement automatically increases the policy's coverage limits to account for inflation, helping ensure the insured amount reflects current property values. Option A is incorrect, as deductibles are generally not impacted by inflation adjustments. Option B is misleading. While premiums might rise, the endorsement's purpose is to increase coverage limits, not premiums. Option D is incorrect because it only applies to coverage limits, not both premiums and deductibles. Question 12. During the investigation of a claim for an auto accident in Oregon, an adjuster finds evidence suggesting both drivers were partially at fault. How should the adjuster proceed under Oregon's comparative negligence laws? A. Deny the claim entirely since both parties share fault. B. Assign liability proportionally based on each driver's degree of fault. C. Cover all damages equally, regardless of fault. D. Assign full responsibility to the insured to avoid disputes. Answer B. Explanation. Oregon uses a modified comparative negligence system where damages are apportioned based on each party's percentage of fault as long as the claimant's fault does not exceed 50%. Option A is incorrect, as claims can still be valid if both parties share fault. Option C misinterprets Oregon's system, as liability is divided by fault percentage. Option D would violate the principles of fair claims handling by unfairly assigning responsibility. Question 13, scenario-based. Laura, a property owner in Oregon, has recently had her building damaged in a windstorm. She files a claim under her commercial property insurance policy, but the insurer finds she was using part of the property for storage without informing them. How should the adjuster handle this situation? A. The adjuster should deny the entire claim due to the change in property usage. B. The adjuster should assess the impact of the undisclosed use and potentially reduce coverage. C. The adjuster should proceed with the claim without considering the usage change. D. The adjuster should inform the policyholder to remove the stored items immediately. Answer B. Explanation. In Oregon, undisclosed changes in property usage may impact coverage. The adjuster should evaluate the extent of the undisclosed use and how it affects the policy, potentially reducing the coverage if the change increased risk. Option A is overly punitive. Not all claims are denied for undisclosed changes. Option C fails to recognize how undisclosed uses may affect coverage and risk. Option D is unrelated to the adjuster's primary responsibility in claim assessment. Question 14. Which of the following best describes the principle of adverse selection in the context of insurance underwriting? A. The tendency of policyholders to file excessive claims. B. The risk that only high-risk individuals will seek insurance. C. The practice of insurers rejecting all high-risk applicants. D. The method of pricing policies based on claim history. Answer B. Explanation. Adverse selection occurs when individuals with higher than average risks are more likely to purchase insurance, potentially leading to imbalances if not properly underwritten. Option A is incorrect. Excessive claims are not a description of adverse selection. Option C is unrelated, as insurers do not simply reject all high-risk applicants. Option D incorrectly defines adverse selection and instead refers to rate-setting practices. Question 15. An Oregon policyholder with business interruption coverage sustains damages that lead to a temporary shutdown of their business. What is required for a business interruption claim to be valid? A complete permanent shutdown of the business. B, proof of physical property damage leading to the interruption. C, documentation of profits for the prior fiscal year only. D, a letter of intent to reopen the business after repairs. Answer B, explanation. Business interruption coverage generally requires evidence of physical property damage causing the interruption. This validates that the shutdown is directly related to an insured peril. Option A is incorrect, as temporary shutdowns due to property damage can qualify. Option C is misleading. Ongoing documentation of profitability may be required. Option D is not a standard requirement, although it may support the claim. Question 16. Which of the following accurately describes Oregon's stance on bad faith claims against insurers? A, insurers cannot be sued for bad faith actions in Oregon. B, insurers may face legal penalties for unfair claims practices considered. Bad faith. C, only policyholders with fraud evidence can bring a bad faith claim. D, bad faith claims are handled exclusively by the Oregon Department of Consumer and Business Service (ECB). Answer B, explanation. Oregon law holds insurers accountable for unfair or deceptive claims practices potentially leading to bad faith claims. Policyholders can seek legal redress if they believe the insurer acted in bad faith. Option A is incorrect. The Oregon allows bad faith claims under specific conditions. Option C is misleading. A fraud is not a requirement for bad faith claims. Option D is inaccurate, as bad faith claims can be brought to court. Question 17. In Oregon, if an insured submits a claim for a total loss of their home under a policy with a replacement cost provision, what is the insurer required to pay? A, the full policy limit regardless of the home's replacement value. B, the replacement cost up to the policy limit regardless of depreciation. C, the actual cash value of the home minus any depreciation. D, the original purchase price of the home. Answer B, explanation. A replacement cost provision requires the insurer to cover the cost of replacing the damaged property up to the policy limit without considering depreciation. Option A is incorrect, as the payout is limited to the actual replacement cost. Option C confuses replacement cost with actual cash value. Option D is unrelated. The original purchase price is not a factor. Question 18, scenario-based. Jonas, a licensed adjuster in Oregon, is handling a claim where the policyholder's car was damaged by a fallen tree. Upon investigation, Jonas finds out that the policyholder failed to make premium payments for the past 2 months and the policy lapsed. How should Jonas proceed? A, deny the claim due to the policy lapse. B, contact the policyholder to discuss reinstating the policy. C, advise the policyholder to pay overdue premiums to cover the claim. D, process the claim as if the policy were active. Answer A, explanation. If a policy has lapsed due to non-payment, coverage is no longer in effect and the adjuster has grounds to deny a claim based on policy ineligibility at the time of the incident. Option B is irrelevant, as reinstating a policy does not affect prior lapses. Option C does not apply, as coverage cannot be retroactively reinstated. Option D would violate policy terms, as the adjuster cannot assume the policy was active. Question 19. In Oregon, if an insurer uses an independent adjuster to assess a property claim, what legal responsibility does the insurer retain? A, the insurer retains no responsibility once an independent adjuster is assigned. B, the insurer retains full responsibility for claim settlement decisions. C, the insurer is responsible only for the payment, not for investigation details. D, the insurer shares responsibility with the adjuster for settlement errors. Answer B, explanation. Even if an independent adjuster is used, the insurer retains full responsibility for claim settlement decisions, ensuring all actions comply with Oregon's insurance regulations. Option A is incorrect, as insurers retain ultimate responsibility. Option C misinterprets the extent of the insurer's duties. Option D is incorrect, because the insurer, not the adjuster, holds final responsibility. Question 20. Which of the following is true regarding Oregon's requirements for adjuster record keeping? A, adjusters must retain claim records for a minimum of 3 years. B, records may be disposed of immediately after a claim is closed. C, adjusters are required to keep all physical claim records indefinitely. D, only digital copies of claim records need to be kept for state review. Answer A, explanation. Oregon law requires that adjusters retain claim records for at least 3 years after the completion of a claim. This allows the state to conduct reviews or audits if necessary and ensures accountability in claim handling practices. Option B is incorrect, as immediate disposal would violate record-keeping regulations. Option C is overly strict. Indefinite retention is not required. Option D is incorrect. Records can be kept in any format, not just digital, as long as they are accessible for the required time frame. Question 21. Which of the following best describes the principle of indemnity in insurance? A. Ensures that the insured receives compensation equal to the amount of the premium paid. B. It prevents the insured from profiting from a loss by limiting recovery to the actual loss amount. C. It allows the insured to recover more than their actual loss if the policy limits are high enough. D. It guarantees that an insurance company pays out the full policy limit for any covered claim. Answer B. Explanation. The principle of indemnity is a fundamental concept in insurance, ensuring that an insured person is restored to their financial position prior to the loss, but does not profit from the claim. This principle prevents overcompensation, promoting fairness for both the insurer and insured. Option A is incorrect because indemnity does not relate to premium amounts paid. Option C is incorrect because it suggests the insured can receive more than their actual loss. Option D is incorrect because indemnity does not require insurers to pay full policy limits in every claim. Question 22. Which of the following is a duty of an adjuster under Oregon's Unfair Claims Settlement Practices regulations? A. To provide policyholders with legal advice about their claims. B. To require insureds to pay for their own loss investigation. C. To make timely and clear communication with the insured about claim status. D. To maximize claim settlements regardless of policy terms. Answer C. Explanation. Oregon's Unfair Claims Practices regulations require adjusters to maintain open, timely, and clear communication with claimants to facilitate the fair claims process. This includes updates on claim status and explanations of delays if they occur. Option A is incorrect. Adjusters should not provide legal advice. Option B is incorrect. Adjusters cannot force insureds to bear investigation costs. Option D is incorrect. Adjusters should follow policy terms in determining fair settlement amounts. Question 23. An adjuster is handling a claim involving water damage to a home. Which of the following would typically be excluded under a standard homeowner's policy? A. Sudden burst pipe causing water damage. B. Gradual seepage from a pipe over months causing mold. C. Water damage due to a firefighting effort. D. Water damage due to rain entering through a broken window after a storm. Answer B. Explanation. A standard homeowner's policy generally excludes damage from gradual issues such as slow leaks or seepage, as these are considered maintenance issues rather than sudden accidental damage. Option A is incorrect because sudden pipe bursts are typically covered. Option C is incorrect because water damage due to firefighting efforts is generally covered. Option D is incorrect as damage from rain due to sudden storm-related issues can be covered. Question 24. If an insured party in Oregon experiences a total loss under an actual cash value policy, what amount are they entitled to receive? A. The full replacement cost, regardless of depreciation. B. The depreciated value of the property at the time of the loss. C. The original purchase price of the property. D. The policy's deductible amount. Answer B. Explanation. Under an actual cash value SEV policy, the insured is entitled to receive the depreciated value of the property at the time of loss. A CV accounts for the item's age and condition, so the payout is generally lower than the replacement cost. Option A is incorrect as a CV does not cover full replacement without considering depreciation. Option C is incorrect as a CV is not based on the original purchase price. Option D is incorrect as the deductible reduces the payout, but it is not the entire claim amount. Question 25. SAM is an adjuster handling a liability claim where both the claimant and the insured share some fault. Oregon applies the principle of comparative negligence. Which of the following best describes how this might impact the claim? A. The claimant is not entitled to any compensation if the insured is also at fault. B. The claimant's recovery amount may be reduced in proportion to their degree of fault. C. The insurer must pay the full amount of the claim regardless of fault. D. The claimant can only recover if they are less than 10% at fault. Answer B. Explanation. Oregon follows a modified comparative negligence rule, allowing claimants to recover damages even if they are partly at fault, provided they are not more than 50% responsible. The claimant's compensation is reduced by their percentage of fault. Option A is incorrect as comparative negligence allows recovery even if both parties share fault. Option C is incorrect. The insurer pays based on fault percentages. Option D is incorrect. There is no 10% threshold in Oregon law. Question 26. Which of the following is true about Oregon's continuing education requirements for licensed adjusters? A. Adjusters must complete 24 hours of continuing education every 2 years. B. Continuing education is only required for newly licensed adjusters. C. Continuing education must only be in ethics-related topics. D. Adjusters in Oregon do not have any continuing education requirements. Answer A. Explanation. Oregon requires adjusters to complete 24 hours of continuing education every 2 years to maintain their license, with a portion dedicated to ethics. This ensures adjusters stay updated on industry practices and regulations. Option B is incorrect, as continuing education is ongoing. Option C is incorrect, as it includes a range of topics, not just ethics. Option D is incorrect, as Oregon does mandate continuing education for adjusters. Question 27. When handling a property claim, which of the following best describes the role of subrogation for an adjuster? A. The process of selling the claim with the original claimant. B. The right to pursue a third party responsible for damages after paying the insured's claim. C. The practice of refusing payment until the policy limit is reached. D. The right to increase premiums based on the severity of the claim. Answer B. Explanation. Subrogation allows an insurer, after paying a claim, to seek reimbursement from a third party responsible for the loss. This is vital in cases where another party's negligence caused the loss. Option A is incorrect, as it describes basic claim settlement, not subrogation. Option C is incorrect, as subrogation does not involve withholding payment. Option D is incorrect. Subrogation is unrelated to premium adjustments. Question 20. Under Oregon's unfair claims settlement practices regulations, an adjuster should avoid A. Denying a claim without a reasonable investigation. B. Providing timely and thorough explanations for claim denials. C. Settling claims in line with policy terms and limits. D. Documenting all communications with the claimant. Answer A. Explanation. Oregon's regulations require adjusters to conduct a thorough and reasonable investigation before denying a claim. Denying without investigation is considered an unfair practice. Option B is incorrect. Providing explanations is required. Option C is incorrect, as settlements should align with policy terms. Option D is incorrect. A proper documentation is essential for compliance and accountability. Question 29. In Oregon, an adjuster is responsible for A. Conducting an independent medical examination of the insured in every claim. B. Ensuring that all claims are closed within 30 days, regardless of complexity. C. Providing unbiased evaluation and fair claim settlements based on policy coverage. D. Refusing coverage if the insured is found at fault in a third-party claim. Answer C. Explanation. An adjuster must fairly and impartially assess claims based on policy coverage terms, regardless of any personal interest, ensuring claimants receive what they are due under their policies. Option A is incorrect. Medical examinations are not part of every claim. Option B is incorrect, as some claims may require more time. Option D is incorrect. Default does not typically impact coverage unless specified in the policy. Question 30. If a homeowner's policy has an 80% coinsurance clause and the insured carries $100,000 in coverage on a property valued at $200,000, how much would be covered on a $50,000 loss, assuming no deductible? A. $50,000. B. $40,000. C. $30,000. D. $20,000. Answer B. Explanation. With an 80% coinsurance requirement, the insured should carry at least 0.8x 200,000 equals $160,000 in coverage. Since they only have $100,000, they fall short and face a coinsurance penalty. The amount payable is calculated as payable amount where coverage carried required coverage, x loss amount 100,000 160,000 x 50,000 equals 40,000. Option A is incorrect. It represents full coverage without coinsurance penalty. Option C and D are incorrect, as they do not apply the proper coinsurance penalty calculation.